Well, good morning, everyone. It's a beautiful Tuesday morning, December 26th, 2023. We get together most weekday mornings at this time, 8 o'clock Central, and it's our pleasure to visit with you today. Today, we're going to, of course, talk about what we do and how we can help people and how you can generate income from it. But we're going to introduce a new concept that is called buy now, pay later, because we just signed a new lender partner for our clients that we'll get to in a moment that is a buy now, pay later setup. So if you're not familiar with this, it's called often referred to as BNPL. So again, buy now, pay later. And I pulled up this article just to hit a couple points of why is there such a tremendous growth? And we talk about growth in buy now, pay later. Look at this curve. Look at the growth in the U.S. consumption of financing through buy now, pay later. Continues to grow and anticipated to grow even more. So this is the fastest growing financial segment in the United States. And so it's an alternative to how people access credit. This graph here talks about the top 4 reasons why people use buy now, pay later. To avoid paying credit card interest, number 1. To make purchases that wouldn't fit into their budget, number 2. Borrow money without a credit check, number 3. Or they are opposed to credit cards. Why this is relevant is we just signed a new lender, a buy now, pay later lender that allows you as one of our distribution partners to go out to the marketplace, and clients no longer have to pay for the startup business funding package in advance. Because in the past, and each of you can adjust pricing as you wish, but the normal setup is the package is $5,000. The grant covers half, $2,500, and then normally you, as a distribution partner, would collect the other half, $2,500. Well, in some cases, and well, I'll leave that. Some cases you'd run into individuals that say, well, I don't have 2,500. Well, now they don't need to come up with 2,500 in advance. We have lenders that will finance it. Well, frankly, that has been around, right? Because we have the link to financing offers. But the problem has been, what if they didn't have good credit or didn't want to use their credit? What happened then with those individuals? Well, now we have a new lender, and that lender is guaranteed approval. Now, I guess I have to put an asterisk by that. There are no minimum credit scores. There are absolutely no minimum credit scores, and they don't filter off of income either. So as long as there is a completed application, it's a guaranteed approval. You probably would assume that. But no one gets turned down as long as they complete an application. So what's the relevance of that? Well, my goodness, now you and I can help even more people, because this program through the grant, the startup package, is immensely valuable. However, before, some people didn't have the money to pay for it. Now they can defer it, buy now, pay later. So specifically, and I've emailed these steps to you. What are the steps that you would go through if you have a client that wants to participate with the buy now, pay later? So let's talk about the 2 different ways that you can submit clients in. Please don't be confused. So we're going to do scenario 1, and then we'll pause and we'll do scenario 2. Scenario 1 is where you simply refer them in, put their information in here, put referred by you, and then you direct them to complete step 2. In that case, they're enrolling directly with us, which isn't the norm, but it's an option. It's the easy option. They enroll directly with us. We get their payment, or we get their financing set up. You get paid. We implement. So that's not really the normal way for our distribution partners, but that's maybe the easiest way, especially if you're just getting started. Now let's go through scenario 2, which is the normal way. If you are one of our distribution partners, and if you're not, you can become one down here. But the point is, you will have your own resources and you'll be going out to the marketplace under your branding. So in that case, you would not have them fill out this page. You wouldn't even bring them to this page. Instead, you would have your own resources, which we provide you. You would have your own client agreement. So here, for example, if someone comes and clicks on it, it brings up our branded information. That's not normally what you would do. Normally, we provide you this flyer and the agreement and everything, so you're able to enroll them directly, and then they would pay you. So let's go through that second scenario. So if you have a prospective participant, you've educated them however you want to educate them, you present them your version of the agreement whereby you control pricing. You can add a performance fee on the back end if you want, but you're in control of that. So the client contracts with you. Now it's time for them to pay you. How much do they pay you? Well, normally the program is $5,000. The grant covers half, so they would pay you the other half, the $2,500. But let's say that they don't want or can't pay the $2,500. What happens then? So again, you get them under contract, and you're going to collect from them a down payment, $500 down payment. At that point, then you would instruct them, even help them if you want, to fill out the finance app. And I'll click on that. So this is the same app as before. The application hasn't changed, and frankly, the process hasn't changed. What's different is we have a new lender that's participating in what we'll call our consortium of lenders. And this one is a buy now, pay later. In other words, they're a lender that approves everyone, does not filter on credit, does not filter on income. So that didn't exist before, but it does now. But to access that, it's the same process here. You would help them fill out this app. The top portion is business information. They may not have that yet, right? Because we're probably forming a business for them. So all of this is optional. None of that has to be filled in. It's not requiring entries. And then there's the bottom information, which is required. There's no hard credit check. What will happen is once you've helped the client complete this, it'll come back to us. It'll go through our AI, our artificial intelligence, our algorithms, and look for funding options for the client. Now everyone gets approved. Now, how much they get approved for will depend upon their circumstance. A lot of people will get approved for working capital in addition to paying you for their enrollment. So they would get enough to pay you for the enrollment, and they might end up with 10, 20, 30, 40,000 of working capital in their pocket. So that's ideal, and that's kind of the norm. But even worst case scenario, even if they have horrible credit or whatever situation where they don't get cash offers, they're not going to be declined. They will receive the buy now, pay later option. So what's the relevance? The relevance is we're pretty much out of excuses now, right? There's no reason that anyone can't participate. So then it becomes an issue of, do they want to participate? Well, I think if you educate them about what we do and how it helps, they probably will want to. So let's look at it from that perspective. But before I get into that, any questions on the new buy now, pay later resource? From a procedural standpoint, it's really no different. We're going to get them to apply for financing offers here. So the front end looks the same. The difference, quite simply, is there's another lender, a new lender that's guaranteed approval. It's not us, it's not in-house, it's third party. They'll be paying third party, not us. Okay, we all good there? Okay, so with that being said, let's go ahead and revisit what it is that we do, what that value proposition is, why someone would want to participate. Well, what you and I do is we help businesses become positioned for fast funding. And fast funding is available not because it's too good to be true, not because of smoke and mirrors, but just simply put, because what we do is we help create fundable businesses. That's what it takes to get funding. To no surprise, is they need to have a fundable business. So, what does it take to have a fundable business? Well, that's what you and I go out and teach and preach and educate on. This is what it takes to have a fundable business. Number one, we need to have a good address. Now, there's more to it maybe than first glimpse. So we need to have a good commercial address that's a unique address, an address that's not used by anyone else, that is not residential, not post office box. It's a unique commercial address. It needs to be zoned as a commercial address through the United States Postal Service. So with that, then, many lenders are going to look for a good address, which we've just covered. But in addition to that, they're going to want documentation of that. They're going to want a copy of the lease. So we reached out to you. We were working over the holiday weekend, for better or worse, just because it's so busy. It's end of the year. But we contacted each of you, I believe everyone that is currently in the startup program, to say, hey, we need to make sure that you have your lease, because that's part of what we call the loan package. The lenders no longer just say, oh, that address is okay, you said it's yours. We need to prove up. We need to demonstrate that it's actually your lease. And so we sent to each of you over the holiday weekend the lease. So if you don't have that, let us know. So again, what's the goal? The goal is to position a business for fast funding by being fundable. The first element, not the only element, the first element is to have a unique address. The second thing is we need to be in good standing with the Secretary of State. So when we form a business, once it's formed, it's usually in good standing. In most cases, on an annual basis, then we need to do a filing. So what we're going to do is to make sure that your business is in good standing. If you want us to, through the program, we'll actually form a new business entity. And we do that for free. So we need to have a good address. We need to be in good standing with the Secretary of State. And then we also need to have an EIN, which essentially means we need to be in good standing with the federal government. And with that, then we're able to get our bank account, not listed here, but it's really a subset of that third bullet. So when we have a business with a good address, we're in good standing with the Secretary of State and good standing with the federal government, now we have that credible foundation. So that's great. That's our starting point. With that being said, now we need to get the business to be fundable, because some people make a mistake. They say, oh, I've got these three things. I'm good to go. I'm ready to go to funding. No, we're not ready to go to funding yet. We need to also have established business credit. So we do that through a two-step process. Step number one, we're going to make sure that the credit profiles are optimized. Obviously, everything we do is legal and ethical and moral and so forth. But we want to make sure that the way that your business looks, or the client's business looks to the outside world, is that it's credit worthy. So we go into Dun & Bradstreet and make sure that the profile is complete, for example. Make sure that we have good industry code information, good employee count, just all the information that the world would see if we were applying for credit. The second sub-step is then to go ahead and add primary trade lines. And we do that. So real primary trade lines we're adding under the EIN. So that demonstrates the business has had access to credit, has managed that credit properly, and is credit worthy. So that's included. So you see a bunch of these things: free, 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 free. Then you might say, oh, great, then I'm ready to go to funding. No, there's one more step before we go to funding. We need to make sure that our balance sheet of the business looks solid, that our business looks solvent. And so we do that as well. So what we're going to do is help the client create a balance sheet. We're going to transfer real assets over to put on their balance sheet. And we do a lot of this. David's on the line right now. David is one of our distribution partners, and we transferred over $60,000 to David on Christmas Eve. So his balance sheet is really strong now. He's got lots of collateral. And so the final element of having a fundable business, in addition to the other elements we talked about, is to make sure that we have a strong balance sheet that shows that we have collateral. Now, at this point, we have a fundable business. That's the end goal. And with a fundable business, then we can go to funding. Some people get confused. Well, where can we go to funding? We can go to funding a lot of places because we have a fundable business. So many different banks and credit unions and alternative lenders are loaning money or lending money or extending credit, lines of credit, what have you. One special type, though, of lender is what we call from a taxing authority. Taxing authorities are great because they typically are easier to get. One example of a taxing authority that provides up to $250,000 to start a business is specifically the Chapman Fund. Now, it's great in many regards, but one constraint is specifically it will only give out $250,000. So what do we do if we need more than $250,000? Well, we could use this as an initial tranche and then go to a different source of capital for more, or some of you are going through the process multiple times. So with that being said, the ChapmanLoanProgram.org is a great resource. If you're one of our distribution partners, this is a great place to go to get familiar. Now, we provide you with personalized, editable resources, agreements, press releases, flyers, proposals, and so forth, but this is a great place to start. If you are someone that's actually looking for funding to start or grow a business, then it's actually accomplished right here through the two-step process, step 1 and then step 2. Also on ChapmanLoanProgram.org, you'll find additional grant resources. This is the link to enroll, but frankly, it's the same as this. We have the link for financing, which we talked about, which includes now the access to the buy now, pay later. We have access to register for the daily Zooms like we're having right now. The full educational presentation. We're looking for individuals that are willing to go out and teach this curriculum, and this is an on-demand version of it. If you happen to want to help us teach this, it's normally a 30-minute presentation online, normally 1 hour in person. Let us know if we can help you with that. Success stories, and then again, the link to get plugged in as a distribution partner. If any of you have questions or need assistance, probably best to email us. For our distribution partners, our model is to schedule, and we can talk more often, of course, but to schedule weekly one-on-ones. Some of you are doing that, some of you aren't. And so it's best practice to schedule weekly one-on-ones. You can also give us a call. Today's schedule is quite full because we've been essentially closed formally for 3 days over the holiday weekend, so we're getting caught up. But if you have specific questions, email, you could call, but be sure that you're scheduling our live one-on-ones so we can make sure that we're supporting you and taking care of all of your clients. So let me see if there's any questions that anyone has that I can help you with today. All right, so Eric is asking about financing terms, and that's a great point. So for financing terms, so again, let's go back to the process, Eric. So first you get the client under agreement with you using your contract. You collect the $500 down payment, and then you're going to help the client apply for financing here. And we looked at what that looks like. I guess it was here, the app. So there's no hard inquiries, there's no cost to apply for these financing offers. At that point, We'll run that and we'll see what offers the client gets, and the client can pick those that they want. In the past, the problem was that some individuals didn't get any funding offers because of their credit or financial situation. Now we no longer have that. Now literally everyone is approved. How much they're approved for, the details of the approval will vary. We've got about 40 different lenders, credit unions, banks, alternative lenders of all different credit types. So the terms will be offered to the client, and then the client can decide which one or which ones they want. They can even stack offers. But if they don't get any cash offers, then we can do the buy now, pay later that we talked about. All right, Samantha says she's missing her lease. Well, no worries. We did send out to everyone over the weekend, but if you're missing that, go ahead and send us an email, and that'll let us know to resend. Over the weekend, we actually sent the lease to everyone, and we text every one of you to say, hey, please go look at your email. But I know you can get busy, so that's okay. It was a holiday. All right. Cecile wants to schedule her one-on-one. Yeah, so all of you who are distribution partners, you should have our Calendly link to schedule the one-on-one. If you don't have that, go ahead and email us, and we can make sure that you have the link to schedule so we can get that scheduled. Ernestina says hello. Well, hello to you, Ernestina. Charles, I guess, is looking for a quick recap of how he makes money by helping people, and that's fair enough. So as a distribution partner, again, anyone that's not one can become one. Real simple down here at the bottom on chapmanloanprogram.org. You'll click on this, it'll pop up a screen, and you'll just initial off. We call it the opportunity fund. You can initial off and get set up. So that's simple. But Charles' question is, how does he get paid for helping people? Well, you get paid on the front end, Charles, and you get paid on the back end. And so you control the pricing because it's we provide you the editable agreement. We do all the service work of the client. We do everything in the back, all the work. You're bringing the client to the table. But normally you're making $2,500 up front, Charles, and then normally you're making 10 to 15 points of the client's capital raise on the back end. But the specific amount that you make, Charles, is based upon your choice, because you, Charles, and the rest of you, you control the client pricing. We don't, right? As a distribution partner, you control the client pricing. You could waive and not charge any performance fee on the back end, or you could charge a little, you could charge a lot. We have some of you that many of you charge that 10 to 15% range. We have one gentleman, he charges 50%. He charges half of the capital raised. It's up to you, right? Because it's your agreement. We provide you an editable form. So Charles' question was simple, but it's hard for me to give a simple answer. How much does he make per client? Because you, Charles, control the pricing. On average, if we just had to pick an average number, you'll make about $20,000 to $25,000 per client that you refer in based upon the front end and the back end. But ultimately, you control that, not us. All right. Who else has questions, comments, concerns about any of this? Covered a lot of information. The most important thing that I think we covered is that we did sign an agreement. It's now live with a buy now, pay later lender, which is awesome. So clients can come in, they can pay you just an initial $500 down, and then the rest can be financed. And so we're absolutely certain the rest can be financed. Before it was like, well, we can try. Now we know, because once they've contracted with you, they've paid the $500 down payment to you, then you're going to help them apply for financing here. We looked at that app a moment ago. Here it is. Even if they don't have any business information, that's fine. So no matter what their circumstances are on the back end, everyone will get approved. The question that Eric asked earlier is, well, what will that approval look like? And my answer is, I don't know, because we've got about 40 different lenders that are, without any hard inquiries, kind of competing for the client's business. They're all making individual underwriting decisions. If none of the traditional lenders will fund the client, then we can go over to the buy now, pay later. That's the only time that we go to the BNPL, is if someone doesn't get any of the traditional offers. All right. Well, I think we covered most of it. If you have any individual questions, which I think as I scan through, a number of you do, recommend that you email or preferably schedule our one-on-ones. Appreciate your time this morning. We'll be back tomorrow morning, same time, same place, and let's finish the month strong. Talk to you soon. Bye-bye.